Hey guys, what's up? It's been a while, but I'm back with more information to help you build wealth. If you've ever been excited to sell a stock to lock in a profit, only to see 30 to 40% of your gains disappear to taxes, then you need to watch this video. So most people know that an IRA or individual retirement account is a great way to save for retirement because you're investing in a tax-advantaged account. But that tax advantage extends beyond just a tax deduction on contributions to a traditional IRA or tax-free withdrawals for a Roth IRA. It's usually not obvious to most people that you can actually buy and sell securities like stocks, ETFs, and even options within an IRA without paying any taxes on capital gains. That's right. Trades that are made within an IRA are not taxable. And it doesn't matter if you hold a stock for 1 year or 1 hour. There's no such thing as short-term or long-term capital gains when you're trading within an IRA, so you don't have to worry about trying to hold a stock for over a year to avoid paying more taxes. Potential tax consequences are only triggered when money is actually withdrawn from your IRA, and those taxes will depend on whether you have a Roth or traditional, and whether or not you have any early withdrawal penalties. Okay, so I'm definitely not recommending that you do this, and this entire video is not financial advice, but you could literally YOLO your entire retirement on some out-of-the-money short-term call options and not pay any short-term capital gains tax if you somehow manage to make a profit. One of the downsides in the likely event that you lose all of your money gambling on options in your IRA is that you cannot write off those capital losses against your taxable gains when they occur within your IRA. So if it were me, I would stick to stocks and ETFs when we're talking about investing in retirement. Those of you who are dividend investors will be happy as well, because dividends are also not taxed within an IRA. Dividends and capital gains distributions are not considered contributions or taxable events. So the dividend you receive from holding Apple stock in your IRA is not taxable as long as it remains in your IRA. So enjoy your sweet, sweet dividends from CVS or your favorite REIT because you're free to reinvest them as you wish without incurring any taxes while they're in your IRA. I should point out that there are still some potential costs that you have to be mindful of when trading within your IRA, but they can be easily avoided. While it's becoming more and more rare, some brokerages still charge a trading fee when buying or selling stocks. If your brokerage still charges these trading fees, then I suggest transferring your IRA to another brokerage. For example, I know Fidelity no longer charges trading fees on stocks, but they still charge a 65-cent fee for each option contract. The point being is to be aware and know all of your potential brokerage fees before you go and start day trading within your IRA. Also, make sure you're aware of any management fees for mutual funds or ETFs that you're holding. Management fees are normal for actively managed funds, but anything over 0.1% should raise some eyebrows, and you might want to consider switching to a comparable fund with lower fees, especially now that you know that you can swap securities in an IRA as much as you want without incurring any taxes. Be aware that currently, the IRS only allows you to contribute up to $6,000 per year to an IRA, and you can only enjoy the tax advantages that come with IRAs if you're below certain income thresholds. Although everything I've mentioned about tax-free trading also applies to 401k accounts, the thing about 401ks is that most of them typically don't allow you to trade in individual stocks like you can in an IRA. Company-sponsored 401ks almost always only give you a handful of fund options like those from Vanguard to choose from, but at least you can move your money from fund to fund within a 401k without incurring any tax events. So this is key. If you happen to have any old 401k retirement accounts from previous employers, you should absolutely roll them into an IRA rather than rolling them into a new 401k so that you have the flexibility to trade in any security that you want. And note, unlike the $6,000 per year limit on contributions to an IRA, there's no limit on the value of a 401k that you can roll into an IRA. For example, my wife and I just rolled $40,000 worth of old 401ks into a rollover IRA in which we invested in Tesla and Moderna stock. As a bonus, I thought I'd throw in the fact that HSAs or health savings accounts are another type of tax-advantaged account where your gains within the account are not taxable. HSAs are actually more similar to IRAs in the fact that HSAs let you trade in individual stocks until your heart's content. Again, just remember to look out for trading and management fees. And one caveat I should mention if you aren't familiar with health savings accounts is that withdrawals from an HSA must be used on qualified medical expenses or else you'll pay a hefty penalty. So in summary, you can trade in securities as much as you want within an IRA, 401k, or HSA and not incur any taxable events as long as the money stays in the investment account. That's all I've got for this video. If you have any questions, feel free to ask me in the comments and I'll see you in the next one.